Hey traders, Nick Shaheen here looking at Lucid. The ticker is CCIV, SPAC-ish. So this is not a judgment against the call or the company. This is purely a trading comment. Don't be upset if my comments are somewhat not as bullish as the price action today. So good news, today it's up like 11%. NEO is up 8 or 9%. I think they're chasing the Chinese headline that they're changing the baby policy there. I'm no, math whiz or anything, but I'm pretty sure it takes decades for that to actually take effect. So if I had a trade in CCIV underwater and this pop fixes me, I would be out. I would consider it a gift. Nothing against the company. Trading, comment. If I have a trade that was hostile and I was in the weeds praying for it to fix itself, the day it fixes itself, thank you, Lord, I'm out. Regardless of what it does after that. Now, if I was staying in it based on conviction because I believe in the company for the super long term, that's on you. Trading, this is an exit point, not an entry point. Why? It's going into prior failures. So they held the floor really well in March. Well, relatively after collapsing. They held it again, and then they lost it, and they couldn't recover it, and they're trying to recover it again. They failed last time. My assumption would be that they'll fail again. Is it a hard line in the sand? No, it's a cluster. So I can't tell you that tomorrow won't be higher. But if I was fixed by this pop, I would let it go without me. I would change my risk. So if I was owning calls and this fixes my calls, I would take the calls out and sell puts or put spreads to where I don't need a rally. I just need it to not collapse again. It's good that it's placing higher lows. That's encouraging. You don't want this to turn into the Hyliion scenario where every ledge like this becomes a super wall. So what's the problem with the stock long term? It is not a mass market production where the cars are super slick. I love it. Performance-wise, they're pretty good. If I remember correctly, their range is pretty outstanding. So I'm not knocking the car. I'm just saying when you price a car at 70,000 or above, it's a niche market by definition. 1%ers can afford it. That's it. Tesla has a cheap model you can get into like buying a Camry. So between a Camry and a Tesla, it's an easy decision. Between a Camry and a Lucid, it's not an easy decision. So it is not a mass market setup so far. They could add models down the line, but I checked their website this last week, and the only thing I could find is a slick-looking sedan that reserve yours for whatever it was, hundreds of dollars, but it is up in the 70s. That's the advertised price. God knows by the time you walk out the door, it's in the 90s. So by definition, it's a niche market, so I don't trade it like a mass market production car. So it's a valid company. It's not like it's a bad company. The stock itself, if this fixes me, this pop, well, how about this? This is not an obvious point of entry. So mini lesson on volume profile. They say price is truth, right? Because don't take my opinion of the company or the stock. Take of what actually happened in this orange line. I don't draw. That's actually the volume that happened that's you, whoever's trading it, that's your actions. This line right here is the one that has had the most action. So going into it from below is going to provide some resistance because everybody wants to trade it. It's just congestion. And it's a zone. This whole zone is. So it's good they're basing here because that's where they should. It's good for the long term if they just mildly recover. And if this huge pop in one day sets me right, I would take the gift at least to lighten up. So if I had 100 shares, I'd dial it back to see. Maybe it drops tomorrow or the day after or the week after. Maybe it doesn't. Maybe it rallies without me. But trading perspective, a huge pop like this, if it gets me out of a hole, I would be more of a seller than a buyer. I would definitely not short it. Because this is a crazy market. Look at AMC. It is completely manipulated, and the SEC has opened the door and said, hey, you shoot each other in open air. I don't care. There are no police around. So shorting it is insanity. But using proper trading techniques and policies will continue to work regardless of how you trade. So technically, what I would want to see is a failure into 2234 or 2224, and then have it fade, hold 19.5-ish, come back and attack it, then you would have an inverse head and shoulders to 28 or 28.5 or 29 or 30. But I can't say in good conscience, this is a day where I load up. If I'm not long and I'm chasing up after an 11% spike, I better have a good reason or a really long-term, what do you call that, horizon. So what else can go wrong, right? Here's Nick pooping on everything here. But first step in investing, you have to know the macro. What's going on with the world? So this could be a fantastic opportunity. If the market crashes tomorrow, what is this going to do? Rally? I guarantee you it won't. Okay, so why am I going to crash? I'm not saying it's going to crash. I'm going to show you perspective. All right, so let's go to, what do you guys track? The SPY. All right, so here's the look of the SPY. Is this an entry point for anything? Is this an obvious entry point for anything? No. Is this a potential vulnerable situation? Yes. So what if it drops from here to here? Oh, that's not too bad, right? That's 10% in the market. So when we fell in May and March, we didn't even fall that much, and it felt the Nasdaq got shellacked because of how people are trading. Everything is amplified. So what if we revert to the mean? Just revert to the mean. This blue-red is the mathematical mean. That's 25% drop in the market. Just reverting to the mean, which would still be a bullish market. Okay, so if we go to the bottom of the channel, which would still be a bullish market, like in the hands of the buyers, that's the 38% drop or 40% drop. I'm not trying to scare you telling you the market's going to crash. I'm trying to lay the land within which you're thinking about trading CCIV. So inside this huge bubble of stocks, where is CCIV and what will it do if the stock market just drops 10%? This is a weekly chart. So this would be reverting to the mean, 10% on a weekly chart. Reverting to the mean on a weekly chart is 20%. Will bring you back to the bottom of the channel. Nothing outstanding. That's still normal price action. My gut is we meander sideways and droop towards the mean, hopefully. Otherwise, we're going to do one of these and these, where a weekly candle, where within the week they open here, they set a new high 3 weeks ago, and then they crashed, and then they immediately rejected the crash and closed somewhere here that week. The next week, they repeated the process, only with complete indecision. They opened and closed at exactly the same place. They tried to rally, they couldn't match it. They tried to fall, they almost matched it. They came back, they said, okay, now we know, we're going to rally. Last week was green, and this is this week, one day. We have 3 more days with the Fed and jobs report, not Fed, Powell speaking, and jobs report on Friday. So binary outcome from this guy's mouth, and the actual jobs report, which is complete bullshit. Whoop, excuse me, bullcrap. So binary event for this week. New all-time highs or revert lower. I would not short this market. I would take bearish positions to balance the portfolio. Shorting the market is pretty crazy. Just because, look at it, it's just primed to go boom. But if it doesn't, it's okay to fade. And if it fades, what happens to CCIV? That's it. Nick signing out. Let's keep the comments clean. All right, no personal attacks.